Hello, everyone, and welcome to this series on internal audit. And this is our continuous series going on since last various Wednesday, and this being, I think, seventh session, I understand. And this is a webinar on fraud risk assessment, and it will be taken by CA Deep Mehta, and having a vast experience on this. Fraud risk assessment and vast experience on the forensic internal audits. So, welcome Deep Mehta on this webinar by Board of Internal Audit and Management Accounting. And friends, we have with us CA Mamta Seth and CA Shyam Dave, who will be moderating these sessions. And it is our endeavor to serve the best. We are also doing taking various initiatives such as revamping the internal audit standards and uh, also doing the concurrent audit on batches of certificate course on concurrent audit, certificate course on internal audit, and like that, various initiatives we are taking to serve the knowledge to the members of our fraternity. And today being one of the best faculty we have as every Wednesday. So with this, friends, if you have any suggestions, feel free to connect to us. It is our endeavor to serve all of you the best. With these words, I welcome all of you to this today's session on fraud risk assessment. And over to Mamta.
Hello everyone. Thank you, Preeti Madam. CA Preeti Savla. Thank you, Vice Chairperson of Board of Internal Audit and Management Accounting ICI. Thank you giving me this opportunity to introduce today's speaker, Deep Mehta. He is a partner with the Forensic Integrity Services of EY India. Is a commerce graduate from the Mumbai University, a chartered financial analyst. Is also a certified fraud examiner, has over 14 years of experience in conducting investigation across various sectors. Over the last 14 years, he specialized in forensic and anti-bribery and corruption diligence matters and has extensive experience in investigation in across various sectors. He has specialized in executing fraud risk assessment, advising clients to plug leakages and optimize the processes. He has executed mystery shopping exercise for multiple clients in banking and BFC sectors. He has also investigated in counterfeit supply chain involved in manufacturing, distributing and selling counterfeit products of client in India. Deep lead the incident response team, which was successful in investigating incidents relating to the data theft and extortion of leading BPO company in India. With this brief introduction, now I request Deep Mehta to take the charge. Thank you.
Hello, everyone. I hope I'm audible and great to have all of you on this day. I believe most of you are having a public holiday, but it is great to have everyone. And Mamta ji, please let me know whenever there is any issue with the voice or anything so that, yeah, great. So I also have for my colleague Akriti and Prakash who have also joined the webinar and they are part of it. So first of all, thank you everyone for joining and a special thanks to Preeti Savla ji for inviting me for this particular webinar. And Mamta ji, it is great to have you every time for the sessions hosted by ICAI. So primarily today, my objective is to cover the internal audit, but with a tadka of fraud in it, what we all call it as fraud risk assessment. Now, what has happened uh, is most of the companies in India now they are looking at internal audits, but these internal audits are not the standard internal audits. They are looking at internal audits with an element of fraud, and it is not about just doing investigation. This is more of a proactive review where in your standard internal audit, you are also telling the clients that which of your process is more susceptible to fraud. How can you make your process which is 99 or 100% fraud free? And also at the same time, ensuring that we are doing our standard internal audits with an extra layer of proactive fraud risk assessment as well. So I will request my colleague Akriti if you have the sharing rights and you can share the deck, then we can take it forward from here.
Sure, Deep. Let me just try if I have the rights.
Yes, I believe everyone can see it. Yeah. So Akriti, you can move on to the next slide. Yeah, you can move to the next one
On
as well.
page 3, is the same visible to everyone?
Yes, ma'am.
It is visible to everyone. Just give me a second. Hello, everyone. Akriti,
We can hear you.
yeah, I think my video is not visible for some reason.
To us, it is visible.
Okay, great, great, great.
Yeah.
So, specifically, I wanted to throw light on the recent enforcement actions which have been, specifically initiated by SEBI and SFIO, and why this is very important because today the companies, what they are trying to do is have a standard internal audit in place. But whenever they are under the radar of, say, SEBI or an SFIO, and whenever these particular enforcement authorities are getting very active, their main question is, are you having a robust system in place in your organization which is able to prevent frauds? And what kind of reviews and assessments is everyone doing to ensure that there is actually an element of fraud which you are able to prevent and also which you are able to detect through your standard checks and the reviews. So that is the reason I wanted to emphasize that these sort of fraud risk assessments are very important, and specifically with the regulators getting active, it is more and more important that all our CA fraternity today is able to lay emphasis on fraud risk assessment and adding that to our standard internal audits. You can go ahead, Akriti. So similarly, like the SEBI and also SFIO, we have seen the MCA also making sure that they are not only getting very active, but at the same time, in their detailed guidelines, they have mentioned that are your current systems and processes able to detect and prevent fraud, and also what kind of governance you are having in place to ensure that you are able to again prevent and detect fraud. So it is very important for all of us to actually ensure that we are able to have an additional layer of internal audit, which is to do a fraud risk assessment. Through these regulator slides, I wanted to enlighten everyone that why the review is very important to have an element of fraud detection and prevention in it. You can move forward. Same like the other regulators, we have seen antitrust actions from the Competition Commission of India, which again makes it very important for everyone to make sure that we are having the right framework for internal audits added with the fraud assessment as well. You can move forward. Similarly, when we did a recent survey, which was done by EY and also our global survey, and also the survey done by FICCI, what we have understood that there has been a significant rise in the whistleblower complaints. And in the whistleblower complaints, what everyone has highlighted is that inaction by the management and inaction specifically by the regulator, and also specifically an inaction by the current management and the board in making sure that you are giving a framework wherein you are able to prevent and also detect frauds. So everyone has emphasized on making sure that you should have a robust framework for preventing and detection of fraud. Go ahead. Okay. Yeah, you can go ahead. You can move forward. Yeah. So what in this particular slide, and I will be sharing this with all the participants as well. The key element over here is that whenever we are doing our internal audit, we add an additional layer of a fraud risk assessment, and our diagnostics, what we are running, should be very much sector specific. And why it is very important to be sector specific? Because every particular sector would have a different fraud risk. So when we are doing our RCM, which is a risk control matrix, it is very important that we are having a preconceived fraud risk already aligned to, so that our current framework and our current mechanism are able to test all of these fraud risks. So in the interest of time, I'm not getting into the details of different fraud risk, but what is very important to all our colleague and our fraternity, that you are having a predefined fraud risk for each of these sector, and it could cover from all the processes. It could be from procure to pay, from order to cash, from your capex side of it, or from your logistics side of it, making sure that how an internal audit you are picking up every different process every time. You're also making sure that you are doing a fraud risk assessment, which is based on the current review, as well as making sure that you are adding different fraud risk in your RCM, which you are going to test every time, and making sure that the current system and processes are able to combat that. So Akriti, you can move to the next slide. So here I have actually jotted down different fraud risks which we have in every sector. And as I told you earlier, that a financial services fraud risk would be very different from an FMCG. An FMCG would be very different from a chemical or an oil and gas, or a media and entertainment would have a complete different ambit of fraud risk. So it is very important that we are having these already defined in a risk control matrix, and keep on adding different risk bases our review, and making sure that we are testing it at each point in time when we are doing our enhanced internal audit. Yeah, Kriti, you can move ahead. So what we have seen, and what I would like to throw light is on some of the common fraud risks that we have seen specifically during a fraud risk assessment. And these are the certain red flags which everyone has to make sure that they are throwing specific light when they are doing their internal audit. It could be absence of segregation of duties, or whenever there is side agreements being done with the different entities which are not covered in the overall ambit. Sometimes the payments are made through a third party, or payments are made by the intermediaries in between, and actually the dealings are not done directly with the OEMs, and we are actually dealing with some of the intermediaries, which would lead to inflated price. We have to also make sure that some of the bribery and corruption related risk are also very much regulated by our current fraud risk assessment. And why it is very important, because the Prevention of Corruption Act in India has been very clear that now it is not regulated to only the government servants, but even people like you and me, all the professionals, all the private sector guys are going to be covered by POCA, which is Prevention of Corruption Act. So when we are doing our standard internal audits and adding a fraud risk assessment layer to it, we should also cover the bribery and corruption angle, where there are high value bills for dinners with, say, a government official, or there are gifts and entertainment related expenses which are significantly high at a particular place. There are events being hosted for different authorities, or it could be enforcement authorities or regulators. So it is very important that the common red flags that we have observed through our learnings are also having covered in each of our internal audits and the fraud risk assessments. Yeah, Akrit, you can move forward. Now, this slide, I am going to be very throwing a lot of light in terms of what is the current scenario and what are other companies doing in terms of making sure that you are having a robust framework for prevention and detection of fraud. So everyone today, and the Companies Act has made it mandatory for all the listed companies to have a whistleblowing mechanism. But nowadays, what is very important is there are a lot of these enablers which every companies have adopted. And this is more from a fraud prevention standpoint. And on my left, you will see multiple areas where people are now laying emphasis, be it be a third party risk assessment, or setting up a benchmark in terms of the procurement side, benchmark in terms of the current governance mechanism, benchmark in terms of the current whistleblowing mechanism. It is very important that the companies are reviewing it periodically and enhancing it. Because what you would have done, like say 3 years back, in terms of a whistleblowing mechanism or the governance framework, with the scenario changing from hybrid scenario to work from home, multiple fraud risk would emerge. And these fraud risks have to be covered in our internal audits and also our fraud risk assessment. And what is very important in the fraud prevention side of it is having the training and awareness side of it. So today, I was wanting every one of you to know that when we are doing a standard internal audits, it is very important to have an element of fraud risk assessment and awareness amongst all our CA fraternity to make sure that in our standard internal audits, we are able to cover these sort of work steps to make our internal audits more enhanced and more effective. And on our right, when we have done a recent survey, which is specifically on internal control weakness, what we have seen is with the fraud risk assessment being added with internal audit, majority of the respondents, which is almost 1/3, 34% of the respondents have specifically noted that their losses have been reduced due to fraud. And also 17% of the people are able to understand that we are able to detect it much faster, because once we do changes in a process basis the fraud risk assessment, our detection has become much, much faster. Secondly, what we have seen is the reduction in fraud has also happened because we are adding an additional layer of internal audit, which is mainly doing the data monitoring and enhanced data analytics. And the last one where we have seen people getting a lot of benefit is through continuous trainings. And when I say trainings, this could be right from governance training to code of conduct training. specifically making sure that everyone in accounts payable is trained to also detect fraud, that the last line of defense, we are making them so robust that they are able to prevent and also detect fraud at a real time basis rather than waiting for a larger chunk of money being lost. So it is very important that when we are adding an extra layer to our standard internal audits, we are able to get a lot of benefit, especially on the fraud prevention side. You can go ahead, Akriti. You can go ahead. We will go directly to the specific areas. And now, as per the Companies Act and also as per the current changes in regulation, everyone is actually emphasizing on having the right framework. Now, for having the right framework, in this slide, I want to emphasize like every company would have their code of conduct, they would have the anti-fraud policy, they will do trainings, communication. But what are they doing proactively? Are your current internal audits enough to make sure that you are able to do a prevention exercise from a fraud point of view and also from a controls point of view? So it is very important that we are having this proactive approach, which the regulators have been telling, which the enforcement authorities have been telling us, that when we are doing any incident related investigation, the enforcement authorities are actually questioning the board and also questioning the CFOs in the company, that what are you doing for actually making sure that you are able to prevent these proactively. And that is the reason the proactive approach and this fraud risk assessment and fraud control monitoring is very, very important to be added in the standard internal audits that we have. And now we'll move on to the key part of this particular webinar in terms of how one should approach and how one should go about doing the fraud risk assessment and making sure that your current and internal audit is having an element of fraud risk assessment into it. So, Akriti, you can go to the next slide. We can talk about the advantages later. Yeah. Just go ahead. You can go ahead. Yeah. Yeah. So everyone, like in our internal audits, generally what we do is we will start with the process understanding. We will look at some data and we will test some data. Now, when we are doing a fraud risk assessment, the first and foremost part is to dissect the entire process end to end. Say, for example, if you're doing procure to pay or an order to cash internal audit, it is very important that you are covering the entire life cycle of the entire process and you're not going speaking to only the head of department or only speaking to one or two individuals. We are making sure that whosoever is involved in the entire value chain of any particular process, we are talking to each one of them. And when we're talking to each one of them, we are understanding the process from multiple perspectives. First, to understand what is the approval matrix, to see if there is a maker checker at every level. Then we are also trying to see, are they following the current SOPs or are they having SOPs which are very much outdated and not actually updated, and people are still following that, and that is not enough to prevent and detect frauds. And when you're doing your internal audits, it is very important that each one of us is pointing out to the management and the board about the current SOPs. Now, specifically on the key business dynamics and the business processes, it is very important to first understand in your current process how much is your interaction with the third party. Is the third party involved as a part of your current process, or is your third party not involved in the overall process? Because these days people outsource accounts payable, these days people outsource certain procurement part of it. To make sure that what is under the company's control, and if it is an external control, what are the processes to govern and also make sure to audit the third party as well in a manner that what processes they are following if any function is outsourced to them. And the last part, which is very important, is how much of your current process is technology driven and how much it is employee or manual intervention driven. So if, say, for example, your current ERP like an SAP or an Oracle is able to throw every specific alert in terms of right from, say, duplicate invoices to duplicate payments to uh, any wrong entries in the vendor master, or for that matter, making sure that your purchase order is not rightly executed. So are you having technology driven controls or are you having manual intervention at every time? And no company is perfect. Everyone is going through a journey. So it is very important that we are able to assess if it is a technology driven thing, what people can do to override this technology. If it is a manual intervention, are we making sure that they are having a proper audit trail in terms of what the maker has done and what the checker has done? And that is how you will do your process understanding in a manner that you are able to dissect every process from a fraud vulnerability point of view. When we are doing our internal audits, we are looking at leakages, what has happened right, what has not happened right. But it is very important to understand how vulnerable any element of your process is vulnerable to fraud. The next important part, which I believe everyone in this forum is doing to an extent, everyone is doing data analytics on, say, an Excel or an SQL in some shape or form. But when you're doing a fraud risk assessment, it is very important that you're doing enhanced data analytics. And for enhanced data analytics, it is very important that you build in a library of scenarios which you are going to test with the current data. And it is not specific to, say, just a duplicate invoice or a duplicate payment. These days, when we do our forensic data analytics, we would run across process. If it is P2P, we will run around 1500 to 2000 tests to say if there are any issues with regards to trending, with regards to additional amount being paid if you're doing P2P, if you're doing same day, same vendor, different procurement, or a same day, different vendor, and a higher rate being paid in some shape or form. Sometimes you have your business which is highly decentralized. You have like 20, 30, 40, 50 plants, and every plant is doing in their own shape or form. It is very important that the analytics are run in a manner that you are able to prevent and also detect on a proactive basis that where you are paying higher amount, where you have actually bypassed the process, where you have made sure that if your process says that above 1 lakh procurement should go directly to the CFO, but people have done splitting of invoices, people have done uh, actually invoices not on the same day but on different days, or POs on different days, just to make sure that multiple POs are being drawn. So very important that when you're doing this analytics, I can spend even a couple of hours just on analytics, but it is very important that how robust your analytics platform is, or how robust your current scenario is there to make sure that you are preventing and detecting an element of fraud through analytics. Now, the third part is very unique, and which is very unique to a fraud risk assessment, where when you see during internal audits, when you see a lot of red flags that a new vendor not being heard of has actually come in to light, and a lot of procurement has happened. We are doing on a quarterly basis. In one quarter, a significant business would have already gone, and one cannot do anything. So it is very important that on certain areas you pick up, say, certain third parties, you pick up certain customers, and you are actually doing the site visits and doing the background checks. And these are not background checks just doing a Google search, but background checks in making sure that what is happening on ground, and to enhance the credit worthiness, the capability of the third party, and also making sure that there is no conflict of interest. Most of the times today, people say that, okay, this is anyone who is not directly related is not a related party by definition of Companies Act. But are these parties known parties, distant relatives, friends, where the transactions are actually not at arm's length, but just because you have your current process not to identify or prevent this, it is very important to add a background check element to it, where it is very important that you are also doing on ground checks, doing some discrete checks, very important. Not doing announced, not going anywhere announced, but making sure you're doing it discreetly. So that is very important that we are adding a background check element in our fraud risk assessment to ensure that whatever red flags which we are identifying through our process understanding and also through a forensic data analytics or data analytics that we do, they are not going unattended. You're not giving it to the stakeholders that these are just red flags, but you're actually going on ground and seeing that, oh, this is not a red flag, but this is something where we are actually losing out money, or the vendor does not exist, or the vendor or the third party is not capable enough. It is just a front. The work is being done by anyone else. So very important, we are adding this particular element while doing a fraud risk assessment. The second part is doing the transaction testing. Now, don't limit your internal audits or your assessment only to process understanding or giving just a definition that this process is a high risk, this element of the process is high risk, and person has to look more upon it. Test lot through the transaction. So looking at right from say quotations to vendor selection documents to the invoice to the GRN to the supportings to the payment part. And once you have strong analytics in place, it is very simple for all of us to make sure that you are taking the worst 50 or 100 sample during our enhanced internal audit of fraud risk assessment and making sure that you're testing the entire documentation of it. Because once you test the entire documentation, you will realize that it is not the data only throwing certain red flags, but the red flags are getting again corroborated by the vendor selection documents, where you will see that there are no quotations or the quotations are there from a related party, or for that matter, the invoices of certain vendors are cleared in 10 days where the average is 30 days, or for that matter, the GRN is not done in an effective manner. So once you are doing your transaction testing very precisely with the red flags being thrown by the data analytics, your fraud risk assessment or your enhanced internal audit becomes very, very important. Now, when you do all these work steps, it is very important that you're not ending your journey over here. You have to take this journey to the next level. And the next level journey is to give them control recommendations. That your current process, what controls are working well and what are not working well. What are the best practices the industry is doing? And it is very important that you are ensuring that whatever red flags or whatever issues that you've identified during your internal audits are actually being attended by every stakeholder and everyone is taking an ownership of it. That our current fraud risk assessment has thrown these red flags. This process is highly vulnerable to fraud. This needs a change. Now, who is going to make sure that this change is going to happen by the next quarter? You have to identify a person who will take the ownership of that change. So when you're reporting to the audit committee and the board next time, you're not only going with the plan of how you have gone about identifying these red flags, but you're also telling the board that how we have set across these stakeholders and making sure who is taking ownership. So in the subsequent quarters, when we are doing or we these testing again, you are actually able to tell the board that 6 months back we saw this, but when we tested it again after 6 months, these are the improvements. And that is what a board or an independent director would actually like and get comfort on. And I would like to tell every one of you on the call and the webinar today is that when the regulators have done their investigation, when they have seen that there is a robust fraud risk assessment and an enhanced internal audit framework already in place, the stat auditor is taking a differential view, and also the regulator is taking a differential view. Okay, this is a one odd instance. They had the right system and processes to prevent fraud, and they were doing everything to make sure that they are actually testing the vulnerability in each process. But a one odd event should be looked upon as differently. Because I would tell you that the today how the stat auditors are concerned and the way the current framework of the stat auditor is, people tend to take a very conservative view. And if there is an fraud incident which has happened in the company, the management of the company has to convince the stat auditor that I had the best of processes and I was actually reviewing the process from a fraud vulnerability point of view every time. These are the reports by independent parties. These are the firms who have given a fraud risk assessment report during their internal audits. And this is a one-odd event where the employee has bypassed the process and done it. So then the stat auditor will mention in their comment and will not hold the KMPs responsible. Otherwise, the fraud would be reported to the central government with the remarks of the stat auditor in their Caro report that the right level of controls were not there. So we have to ensure that the control recommendation is discussed at the board level, at the audit committee level, to make sure that if any incident is also happening, the board and the management is able to cover themselves and also give comfort to the stat auditor and not only to the audit committee. So we can move forward now, Akriti, but I believe everyone has been able to get this particular methodology of doing a fraud risk assessment. Now, what we have advised to everyone and also to all our colleagues over here that when you're doing your internal audits, you should make sure that the fraud risk management is covered through the COSO framework. Now, COSO framework is nothing but in 2016, a committee of sponsoring organizations of the Tradeway Commission, which is nothing but COSO, has made sure that everyone is adhering to the guideline, which is mainly on the fraud risk management guide. So all the multinational companies and the listed companies, which are covered by the Companies Act, it is very important that you are doing your fraud risk assessment and covering that as part of your COSO framework or part of your internal audits, because you would be then only able to show the regulator and the management and the committee and the board that what sort of framework you have had. And Akriti, you can move back to a slides. What are the advantages of doing these fraud risk assessment and making sure that our standard internal audits are actually able to cover these fraud risk assessment part? Yeah, can move back. Move back. One more slide. Yeah. Yeah. So over here, what we have penned down is the key advantages, which as our fraternity, we would be able to tell to our clients and also to the board and also to the audit committee that the first and foremost advantage is huge cost saving, which you can drive through your FRA added to internal audits. When you're adding your fraud risk assessment to your standard internal audits, you are able to reduce the occurrence of fraud. You are able to predict the vulnerability or address the vulnerability so that you are able to reduce fraud in that particular area. And trust me, guys, basis my experience, I can tell you that companies who have adopted fraud risk assessment in their internal audits have reduced their occurrence of fraud to a significant extent. So it is not only to please the board and the audit committee, but the management is actually getting a tangible advantage out of it. Then it is very important that we as professionals are able to enlighten the management that your current activity in the process, there are certain elements which are extremely susceptible or vulnerable to fraud. So once you've highlighted that, the management then becomes it is not only compulsory for them, but also gets enlightened that, okay, we have not focused on reviving this process, but it is very important that this process, even if there is a capital expenditure being done in form of technology or anything is required, we are giving that high priority because we don't want to lose money and we don't want to actually have a plan where we are actually, caught off guard. Even after identifying the risk, we are not able to plug that. So you are able to diagnose and also allowing the management to take a call where they want to emphasize more. Because see, every internal audit will throw 20 things, like how you are doing your high risk part to all the board and the management. But apart from the high risk, when you're doing a fraud risk assessment and you're telling them these element of a process is highly susceptible to fraud, they would they would be able to develop a plan in a manner that they are giving highest emphasis and priority to the process which is more susceptible or vulnerable to fraud. And what is very important, that as professionals and also as the company management, everyone is able to comply with the regulations and professional standards. By doing a standard internal audit, you would be doing, say, 70%, but adding a fraud risk assessment element to your internal audit, you are able to comply with all the regulations what a Companies Act have told us, and also the guidelines which have been laid by the regulators in terms, be it be SEBI for the listed companies, or for that matter, even MCA. And when you have a proper governance in place, the self-declaration done through the stat auditor or the self-declaration done by an internal auditor to the board, and then subsequently from the board to the regulator, is very, very important, that the board is very serious in identifying and also making sure that they are able to also mitigate this risk. And this is the plan they have to mitigate the fraud risk which have been identified proactively by the management, by the company, and not by the regulator. So this is what we generally push in terms of our fraud risk assessment element. And it is very, very important that you are adding that level of fraud element tadka to your standard internal audits. We can, I think in 10 minutes, I would like to cover a particular case study. Now, the case study is, again, we have done this and presented this case study when we're doing an event for the Ministry of Corporate Affairs as well. And Akrit, you can move to the case study directly. It's move to the slide ahead. Yeah. Yeah. Now, this is a Harvard case study, which is specifically a level 1 case study. In our future webinars, we will have an enhanced case studies, but for that, everyone has to do some bit of pre-work. This particular case study does not have a specific pre-work, so that one can read it right now and apply your thinking hat and just go ahead with it. So this is again, a standard thing where there was in-house Harvard case study where they had one of their renowned lecturer who had experience in education industry, and that particular lecturer was actually involved in giving guest lectures to multiple other universities as well. And the reason of leaving that particular lecturer when he left the organization was not given. And what we understood, that here we have mentioned a pseudo name, which is Mr. Patel. So Mr. Patel had certain contacts in XYZ university, and which was actually no one but where his relatives were playing a key role in the management of the university. And after taking minimal approval from the board, he was appointed there as an associate director and a program coordinator. Further, what we also understood, that he was given the responsibility of handling all the functions with regards to guest lecturers, and wherein he included himself as a guest lecturer, vendor selection, vendor evaluation, onboarding of different lecturers, and also making sure that he's given the authority for vendor payments as well. Further, what was observed that he has been occupying that particular role and position since the past 6 years, during which it was noted that he has exceeded the budget allocated every point in time. So almost 5 out of 6 times, the budget which was allocated was actually exceeded by almost 4 to 5 crores. And 4 to 5 crores contributed to around 4 to 5%, which is almost 100 crores of the total uh, budget. And it was also identified that Mr. Patel had few lecturers and vendors who provided external lecturers in the university. Each time the management asked that why you are spending excess, why we are having so many guest faculties, and why you're not having in-house facilities, he would give a detailed report showing that the number of external lecturers, their hourly breakup as well as the trends, which one would look upon and say that yes, everything is very well documented, and the person has followed the SOP and everything is well documented. But this particular case study, have given everyone that when you are starting your fraud risk assessment or an internal audit, what are the certain red flags where people should actually observe just by doing a first level interaction or understanding. So while you're going to look at data, you're going to look at budget versus actual, you're going to look at the detailed process dissection. But what is very important that in your current first interaction, what are the red flags we are able to identify, and making sure that then you are shaping up your internal audit in a manner that you are able to cover a fraud risk assessment as well. So generally when the client, everyone is approaching, it is very important that you are getting a thorough background of what has happened with the company or what has happened with that particular institution. And if XYZ is the process owner, then what is the history of the process owner? So, and why I'm giving this case study, because this does not require any pre-work, but everyone, it is very important that we are able to identify what is an element of red flag and what are the fraud vulnerabilities before even starting the fraud risk assessment. So, basis this, I want everyone to note down what are the red flags, and then I can open it to the public for the question and answer. But basis this particular case study, what I want everyone, and everyone can do a self study or a self assessment in terms of the red flags which you should have identified through your interaction. Are you able to identify by yourself? So I request everyone to jot down on a simple piece of paper. If you're sitting on a computer, just type it down in Word, the red flags, what you could get through the interaction. And this was the background you got about a university where, say, any one of us is going to be appointed for doing an internal audit and a fraud risk assessment. Why I'm laying emphasis over here is in your first interaction itself, you should be able to shape up your internal audit plan and your plan for the fraud risk assessment for the year. So I'll just give 1 more minute for everyone to reread if required, and then I will tell you what are the red flags, what each one of you should have identified. If you would have got a scenario where you had an interaction and you have got a particular background. So Akriti, you can move to the next slide. Yeah. So what are the potential red flags? I wanted every one of you to, actually make sure that you understand and you are able to assess that during your interaction. So the first and foremost is the background of the process stakeholder. That if the process owner in the previous company, was there any particular issue, one has to just get some bit of a soundbite around that. Then in the current position, if somebody is being appointed, here Mr. Patel was appointed at a high position without that level of experience and capabilities. So it is very important that when you're speaking to the process owner, you are actually able to assess that is the person capable or having the right level of experience or not. Then very important is the authority the person is having. Is there a segregation of duty which is happening or not happening? A very standard thing like a vendor onboarding or a third party onboarding process, is it robust or there is no process? Then you, as I was telling you, that don't limit yourself to the data analytics part. Once you are identifying any significant red flag, go on ground to understand whether that particular third party exists or they have the capability or not having the capability. Here it was very clear that the lectures which were delivered by the third party consultant was actually a fictitious consultant. Then these days, very, very important is when you're doing your internal audits again and again, people will learn from your previous internal audit and they will make sure that this time the SOPs are followed. This time you are making sure that the documentation is very good in place and which was there in the previous particular case study as well, where Mr. Patel was actually able to make a very robust documentation. But at the same time, are we going into the next level of documentation during our transaction testing that, okay, the system says they all the lectures were conducted. Where is the attendance record of the student? How many students attended that particular lecture? So you have to go and ask for more and more documentation in your transaction testing to make sure that you are able to gather that level of evidence. And the red flag is not only a red flag and you are able to identify that. But basis this particular case study, I want to you all to gauge what are the red flags one can just identify basis the conversations. There was here, you should always ask when you're doing accepting it the first time, what was the previous internal audit report? If there was no previous internal audit report of that particular process or their process owner, that is a bigger red flag. Then the most important part when you are taking up your internal audit of fraud risk assessment, basis your conversations, you feel that there are multiple red flags, always ask for past whistleblower complaints. Always try to understand, is this company having a mechanism where they're actually getting any whistleblower complaints, or it is just a namesake hotline which is just being developed or a namesake email ID being given where there are no complaints actually coming in. So this is the manner you will have to identify red flags basis the interaction and then shape up your internal audit and your fraud risk assessment in a manner that you are actually addressing the vulnerabilities of fraud along with your internal audit. So this is it from my end for the session, but I'm very happy to take more and more questions. And as I have promised that I would be sharing this deck, and this will be also included in a recorded session as well. So I will request the moderator and the ICI body to also have a provision where we can share this deck with everyone. But I would now like to open this particular forum for any specific questions.
Yeah, Deepji, so there are a couple of questions
Yeah.
which is listed out. So Pratik is asking whether there are any standard fraud risk assessment policy that should be framed, and if yes, what all points should be considered while drafting fraud risk assessment policy at organization level?
Sure.
Yeah.
So I'll answer this, but first of all, there is no fraud risk assessment policy, but you can have fraud risk assessment guidelines which one can draft in, and every company should have an anti-fraud policy. So what policy you will draft from an anti-fraud point of view, that what I'm covering in my policy, which will help the organization from an anti-fraud perspective. So anti-fraud policy can include that you will be doing a timely fraud risk assessment in picture. There will be employee background checks. There will be third party background checks which will happen. And if a fraud is detected, what would be the fraud response plan? How all the employees would be covered in the ambit, whether all the employees have to declare their assets on an yearly basis. So you can have multiple elements in your fraud anti-fraud policy. And from a fraud risk assessment policy, you should have a guideline. And the guideline should cover that which process you will cover in a particular quarter, quarter on quarter, which processes you are going to cover. Your report should be given on a quarterly basis to who should be the stakeholder of your reports. It should be only the audit committee or the board. And once you have identified any fraud risk vulnerability, which is high vulnerability, in the next 2 quarters, is the particular fraud risk vulnerability actually addressed? That should be part of your guideline in your fraud risk assessment guideline. So this is how company should have an anti-fraud policy and a fraud risk assessment guideline, which is acting as a Bible or a book or handbook for everyone, that how your fraud risk assessment would be done, how it would be communicated, and the implications of that assessment, how it will be addressed.
Okay. Yeah. So next question is, if the company is having a separate LOD team, that is a risk management team, can it be considered as company has implemented fraud risk assessment mechanism?
No. If the company is having a specific risk team, would be that is just a one part of process they have done. But what on quarter are they generating particular reports which are discussed at audit committee and a board level? Then one can say that yes, they are having that right level of framework. Just having the team in place, but they are not having a framework to generate a report for every processes and discuss with the audit committee and board, then it would not have that level of relevance.
Okay. I would also request the participants, if they have any questions, they can mention it. We have a couple of questions more. Meanwhile, if any participant has any question, he can write it down under submit query option will be there. Yeah, so the next question, Deepji, is during on-ground check, how to identify that the conflict of interest exists between employee and vendor, as vendor can be a friend or a relative?
Correct. So I added a part of it that when you're doing your on-ground checks, make sure that it is discrete in nature. And when I say discrete in nature, it can be an element of mystery shopping, or it can be an element of completely discrete check where you don't have to go as you've come from the audit firm and you're coming here to inquire. You can just say that we have been given a particular task and I wanted to understand. Or sometimes you can just do a simple mystery shopping exercise, that you can go as a prospective client, do the mystery shopping part, and mystery shopping is allowed as per the Companies Act as well, where you are just trying to do certain bit of mystery shopping to understand who are the owners and what is the relationship they have. If they claim during the mystery shopping, if they claim that so and so company is my client, so you can say that, okay, since how long you are dealing with this client? How do you know this client? And in that process, if you get that information, you can report that. So the discrete element is very important, because if you go as announced, the person on the opposite side will definitely know what one has come to check for and will cover those grounds, and you will not get the right picture.
Correct. Yeah.
Yeah.
So now the next question is, that is, I think, last question, unless anyone else submits any question. The last question is, if in-house internal audit team is doing forensic audit or performing investigation, how can they implement industry best practice? And do we need to hire any external consultants just to obtain industry best practice?
Yeah. So I'll answer that in two parts. First of all, if anyone is having an internal audit team, which every company would have, and every company would also have in these days a separate team for forensic, or sometimes the internal audit team will do the forensic audit. What the Companies Act and your stat auditor would request is that if it is not of a significant value, or the KMP is not involved, if they are doing certain things at a in-house level, which is fine, but I will come and then I'll answer the second part of it. But in most of these reviews and forensic audits, the regulator or the board or the stat auditor as well have mandated for an independent forensic audit. And when I say independent forensic audit is they feel that whenever there is a senior person involved or whenever they feel that the quantum is material enough. Say materiality can be defined as 1% of your turnover or 0.5% of your turnover. It can be all defined internally. But if it is material amount, or for that matter, it involves your senior employees, and nowadays it is not only the defined KMPs, it says KMPs or senior managerial resource. If they are alleged of any wrongdoing or fraud, then an independent forensic audit has to be done. So, as a best practice, they have to make sure that it is being done by an independent party. Now, the second part of the question is for the best practices. Yes, it is very important for everyone to hire a consultant or any of the professionals which are there in this forum, because unless you have seen and done work for 10 different companies, you will not be able to have a best practices part of it. And there is no particular handbook which says that these are the best practices. They would say your forensic audit should involve these 10 things. Your internal audit should involve these 10 things. But what are the ways to make sure that what you're doing is the best? You need a consultant to assess where you are vis-a-vis what companies are doing and what you can practically adopt. It is not like that you will adopt practices of a 5,000 crore company for a 500 crore company. What is practically best for you? If there are 10 500 crore companies who have gone through the journey, the consultant would be able to tell you that what you can adopt easily. So it is very important to get an outside view. That is my thing, and that is how I would answer that.
Yeah, thank you. So, meanwhile, one more question has come. Sandeep is asking, generally there is a resistance in information sharing or objection from operating level management if we probe a bit more. They state that the scope is limited to assess the internal controls and not to detect any fraud. How this situation should be handled?
A very good question. This all of us will come across at every given point in time. There would be always a resistance. There would be always that the stakeholders will say, we don't have time. We are giving you 15 minutes, whatever you want to ask, whatever information we can share, we will share on sample basis. You give your IRL. Very important for all of us to do two things. One is before you are meeting the stakeholders, do your homework well in terms of what the previous internal audit reports have actually thrown and what they are. So study those reports very precisely and also make sure that you are taking the dump of the data. You are not relying on the person which they have given you analyzed data in some shape or form and given it to you for a particular quarter that this is your scope, this is it. Even if that is the quarter, you speak to the management that we, for trending purpose, we require a little bit of past data, we require a little bit of current data. Download the data at the source from any, it could be Tele, SAP, Oracle, whichever ERP, download that dump as it is, analyze that. So that when you are going to the stakeholder, you are telling that, okay, we have this quarter in a scope period, this is what we have identified as a red flag. If you think that it is rightly done, then explain. So two things, read your past reports very precisely to understand how the audits have gone. And the second is take the data from source, analyze it, and then question them so that when they're questioning you and there's a resistance of sharing the data, you tell those particular stakeholder, I don't want any analyzed data. You speak to the relevant authority that I will download from the backend, I will download the dump, and I don't want this specific data. The data analytics would be little painful, but it will show you the right result and you will get the right set of data without resistance.
Correct. Yeah. So Sandeep, I hope that answers your question. With that, before we conclude, I would like to give my heartfelt gratitude to our esteemed speaker, Deepji, for this insightful webinar, where he thoroughly explained all the nuances of fraud risk assessment. Deepji, I am sure all the participants will take away a lot of knowledge on this topic today, especially the case studies which you discuss. With that, they will be able to better implement the subject matter discussed by you. especially when the risk of fraud has increased, the need for legal and regulatory compliance that has also increased. That has also warranted us to be well equipped with the nitty-gritty of fraud risk assessment. Certainly, it will enlighten the participants to navigate these issues in a better manner through this webinar. Also, on behalf of ICAI's Board of Internal Audit and Management Accounting, I would also like to thank all the participants for attending this wonderful webinar. Thank you, Deepji.
Thank you very much, Shyamji. It was great having all of you. And you can, I'll share a link which you can
Yeah.
share with the participants for the deck,
Yeah.
and that can be shared as well.
Sure.
But it was great having all of you. And it is very important that when you're doing internal audits, I want everyone to add that element of fraud risk assessment, because that is the need of the hour.
Right. Thank you.
Thank you again.
The technical committee can circulate the PPT then afterwards.
Yeah.
Okay.
Sure.
Thank you. Thank you so much.
Thank you. Thank you.